Good day, future CPAs. In this video, we are going to discuss non-current assets held for sale and discontinued operations. At the end of this video, you are expected to describe the criteria for held for sale classification, state the initial and subsequent measurement of held for sale assets, differentiate non-current asset held for sale, disposal group, and discontinued operations, and state the presentation requirements of discontinued operations.
Classification as held for sale. Non-current asset. It is defined as an asset that does not meet the definition of a current asset, but it doesn't mean that all non-current assets may be classified as held for sale. In this topic, we are just focusing on non-current assets within the scope of PFRS 5. It includes PPE, investment property measured under the cost model, investment in associate subsidiary or joint venture, and intangible assets. Disposal group, on the other hand, is a group of assets which an entity intends to dispose of in a single transaction. Take note that a non-current asset is classified as held for sale if the carrying amount will be recovered principally through a sale transaction rather than continuing use. Next, conditions for classification as held for sale. A non-current asset is classified as held for sale if it is available for immediate sale and the sale is highly probable. What does it mean by sale is highly probable? First, the sale is highly probable if the entity is committed on selling the asset and is actively locating a buyer. The sale price of the asset is reasonable in relation to the asset's current fair value. Next, the sale is expected to be completed within 1 year from the date of classification, and lastly, the plan to sell is unlikely to be withdrawn. Here are some scenarios to have better understanding of the criteria for classification as held for sale. On the first scenario, the criteria is not met because the building is not available for immediate sale, for the building will still be used until the construction of a new one. With that, the building continues to be classified as PPE. On the second scenario, the criteria is met because the building is available for immediate sale. On the third scenario, the criteria is not met because the building is not available for immediate sale, for there will be renovations to be done. And lastly, on the fourth scenario, the criteria is not met because it has not yet determined whether to sell or to lease the equipment. Next, exception to 1 year requirement. If an asset is not sold within 1 year from the date of classification as held for sale, it will be reclassified back to its previous classification unless the delay is beyond the entity's control and there is sufficient evidence that the entity remains committed on selling the asset or disposal group. Exclusive view of subsequent disposal. If a non-current asset is acquired exclusively with a view to its subsequent disposal, it is already classified as held for sale at the acquisition date if the sale within 1 year is met and is highly probable that all requirements will be met within a short period of time after acquisition, that is usually 3 months. Next, event after the reporting period. A non-current asset or group of disposal met the criteria for classification as held for sale only after the reporting period is not classified as held for sale in the current period's financial statements. Next, property dividend. It is a non-monetary type of dividend. It is where company gives shareholders property in lieu of cash or cash equivalents. A non-current asset or disposal group declared as property dividend is classified as held for distribution to owners rather than held for sale. On the other hand, non-current assets that are temporarily taken out of use are not treated as held for sale as if they are abandoned. Non-current assets that are abandoned is not classified as held for sale because its carrying amount will be recovered through continuing use rather than principally through sale. As what we discussed in the second slide, it is classified as held for sale if its carrying amount will be recovered principally through a sale transaction rather than continuing use. Next, measurement. Assets or disposal group are measured initially and subsequently at the lower of carrying amount and fair value less cost to sell. When fair value less cost to sell changes, there will be impairment losses or gains on reversal of impairment that will be recognized in profit or loss. Gain on reversal of impairment is recognized only to the extent of cumulative impairment losses that have previously been recognized. Lastly, held for sale assets are not depreciated or amortized.
To understand further, let us have this illustration. On December 31, 20X1, ABC Corporation classified its building with a historical cost of 1 million and accumulated depreciation of 600,000 as held for sale. All the criteria under PFRS 5 are complied with. On that date, the land has a fair value of 350,000 and cost to sell of 20,000. So, first, we must find the initial measurement. Kukuhain muna natin yung carrying amount and the fair value, whichever is lower. So, by just simply subtracting the historical cost to accumulated depreciation, makukuha natin si carrying amount na 400,000. While the fair value less cost to sell, the formula is already stated na, so the answer is 330,000. So dito, dahil nakuha na rin yung carrying amount and fair value nila, yung non-current asset held for sale mo ay i-measure mo as 330,000 dahil yon ang mababa between the two. And sa pagre-record naman ng journal entry, so first is the building. Since nakuha na natin yung measurement niya and the rule in that measurement that whichever is lower in carrying amount and fair value less cost to sell, ang re-record natin for the building held for sale is 330,000. Accumulated depreciation, 600,000. Impairment loss, 70,000. Makukuha naman natin si impairment loss by simply subtracting the carrying amount to fair value less cost to sell and the credit building 1 million. Next, the building was not sold in 20X2. However, the exception to the 1-year requirement was met. On December 31, 20X2, the fair value less cost to sell of building is 310,000. The further decrease in fair value less cost to sell of 20,000 is charged as impairment loss. We can notice that the building is not depreciated while it is classified as held for sale. Reversal of impairment. For this illustration, the building was not sold in 20X3. However, the exception to the 1-year requirement was still met. On December 31, 20X3, the fair value less cost to sell of building increased in 420,000. So, the gain on reversal of impairment is to be recognized on December 21, 20X3 are computed as follows. Dito, makukuha natin sa reversal by the rule of measurement na whichever is lower between the total recovery and the cumulative impairment loss recognized. Pero bago yon, alamin muna natin kung paano makukuha si cumulative impairment loss recognized. Dito, ipagpa-plus lang natin si impairment loss recognized nung year 20X1 at nung year 20X2. Yung magiging sagot sa kanya, yun yung magiging cumulative impairment loss recognized. On the other hand, para makuha natin si total recovery, ipagma-minus lang muna natin si given na fair value less cost to sell of building increase na 420,000 kay given na subsequent measurement na fair value less cost to sell na nag-a-amount na 310,000. So, the answer is 110,000. Ngayon na meron na tayong ipagko-compare that whichever is lower, ang re-record natin na gain on reversal of impairment loss on the measurement sa journal entry ay 90,000. So, building held for sale, 90,000, and then credit gain on reversal of impairment loss, 90,000. Disposal group is nire-remeasured muna natin siya based sa applicable PFRS bago siya i-remeasure sa kinocompute at kinocompare natin na fair value less cost to sell of the disposal group. The impairment loss for the disposal group reduces the carrying amount of the non-current asset in the group that are within the scope of the measurement requirement of PFRS 5 in the following order of allocation. Letter A, any goodwill allocated to the group, and letter B, other asset of the group pro rata on the basis of the carrying amount of each asset in the unit group. Changes to a plan of sale. An asset that ceases to be classified as held for sale is measured at the lower of an asset's letter A, carrying amount before classified as held for sale adjusted for depreciation, amortization, or revaluation, and letter B, recoverable amount at the date of subsequent decision not to sell. Note that recoverable amount is the higher of an asset's fair value less cost of disposal and its value in use. It can be seen on PFRS 5 Appendix A. However, the value in use is the present value of estimated future cash flows expected to arise from the continuing use of an asset and from its disposal at the end of its useful life. It can also be seen on PFRS 5 Appendix A. Removal of an asset or liability from a disposal group. If an entity removes an individual asset or liability from a disposal group, the remaining asset and liabilities of the disposal group will continue to be measured as a group only if the group continues to meet the criteria for classification as disposal group. If it is not, the remaining current asset of the group that individually meet the criteria to be classified as held for sale are classified as held for sale. The other assets and liabilities that do not meet the criteria will cease to be classified as held for sale. Discontinued operation. A discontinued operation is a component of an entity that either has been disposed of or classified as held for sale. And letter A, it represents a major line of business or geographical area of the operation. Next is the part of single coordinated plan to dispose a separate major line of business or geographical area of operations, or lastly, if it is a subsidiary acquired exclusively with a view to resale.
In discontinued operations, we present the results in statement of profit or loss and other comprehensive income. It is presented in a single amount which comprises post-tax profit or loss of discontinued operations and post-tax gain or loss recognized on the measurement to fair value less cost to sell or on the disposal of the assets constituting the discontinued operations. It is presented after profit or loss on discontinued operations. In presentation, we have to remember the following. In non-current assets held for sale, the asset being sold is a single non-current asset, and we present it in statement of financial position. Second, group of assets are being sold in disposal group held for sale, and is also presented in statement of financial position. Lastly, the asset being sold in discontinued operations is a component of an entity and is presented in the statement of financial position and statement of profit or loss and other comprehensive income. Note that non-current assets or disposal group held for sale that is not a component of an entity is presented as continuing operations. Now we are going to talk about gain or loss on disposal of discontinued operations. Kapag ang actual disposal ng discontinued operation ay nangyari sa same period na ito ay kinlassify as held for sale, the gain or loss is the actual gain or losses. On the other hand, kapag ang actual disposal ng discontinued operation ay nangyari sa subsequent period na ito ay kinlassify as held for sale, there will be an estimated loss on disposal disposal na marerecognize sa period na classify ang component of entity as discontinued operation at walang gain from sale na i-recognize hanggat hindi pa tuluyang nadidispose ang nasabing component. Severance pay or employee termination cost, additional pension cost, employee relocation expenses, and future rental on long-term leases are the direct costs associated to decision to dispose a component. To further understand, here is an illustration. So based on the given, we have actual operating losses on 20x1 and 20x2 of 700,000 and 650,000. On 20x2, we have actual gain on disposal of 400,000. We're going to total that and we're going to have negative 700,000 for 20x1 and negative 250,000 for 20x2. We're going to deduct the 30% tax and we will have the loss from discontinued operations of 490,000 on 20x1 and 175,000 on 20x2. Estimated operating losses and gain on disposal is just disregarded. Retrospective application is applying a policy as if it has always been implemented. That is the case for discontinued operations wherein when a component of entity is classified as discontinued operations, all of its results or operation even before and after the classification date will be classified as discontinued operations. Financial statements in the prior period will be restated. In presentation on statement of financial position, non-current assets held for sale are presented as current. Take note that in disposal group, its assets and liabilities are presented separately for offsetting is prohibited. What happens when held for sale asset or discontinued operation cease to be classified as one? If a discontinued operation ceases to be classified as one, it is accounted for retrospectively. While if a held for sale ceases to be classified as one, it is accounted for prospectively. For reference, here is an illustration of how held for sale assets and discontinued operations are presented in Statement of Profit or Loss and Other Comprehensive Income and Statement of Financial Position. In the cash flows, they are presented separately whether they relate to operating, financing, or investing activities. Let us summarize what we have learned today. Non-current assets are presented as current assets in the Statement of Financial Position only when they qualify as held-for-sale asset. Held-for-sale classification is permitted when the non-current asset or disposal group is available for immediate sale in its present condition and the sale is highly probable. Held-for-sale assets are measured at lower of carrying amount and fair value less cost to sell. They are not depreciated. A disposal group may qualify as discontinued operation if it is a component of an entity and meets other requirements under PFRS. Result of discontinued operations are presented in SEI as a post-tax single amount. Assets and liabilities of disposal group are presented separately on Statement of Financial Position. That is it. We hope that you learned something today. Let's part ways with this quotation from Bo Bennett. A dream becomes a goal when action is taken towards its achievement. Fighting future CPA.